from WXXI News, this is Connections. I'm Evan Dawson. Our connection this hour was made on November 29th when the value of one Bitcoin crossed $10,000 for the first time. So what exactly is a Bitcoin? A whole lot of people have been asking that question in the last few weeks. The $10,000 mark brought a wave of mainstream media coverage for Bitcoin and also for other forms of cryptocurrency. The longtime believers in crypto are, of course, still there, but now there are many new investors looking to pick up Bitcoin or try to cash in on this. And that has made things pretty volatile. Bitcoin rose to near 12,000, then lost roughly a third of its value in just hours. Was that the pretense to a collapse? Well, last night Bitcoin approached $18,000 per coin. It's been on fire for months now. And put it this way, back in June when we last talked about Bitcoin on this show, let's say you bought 10. Today you could sell them and make a profit of nearly $150,000. So this hour we're going to try to answer your questions about cryptocurrency. Is it an investment? Is it a viable currency yet? And where? And are there other forms that are better than Bitcoin or at least something to keep an eye on in the world of cryptocurrency? My guests include Gary Palmer, who is the founder of Minting Coins and Bitcoin NYS. Is that right, Gary?
That's right.
All right, so Bitcoin NYS is what?
Bitcoin NYS is a meetup group organization where we're bringing local people in the greater Rochester area and all from New York State together to learn about Bitcoin and blockchain technology in a community setting.
George Conboy is the chairman of Brighton Securities. We like to bring in George because he's a regular face around Rochester, but also from the perspective of what investors might be saying, not exactly immersed in the world of crypto, but sort of observing and thinking about historical context. Nice to have you back.
I think that covers it. Thank you, Evan.
Good to have you back. And on the line with us is Mike Komaransky, a Bitcoin investor, the former head of Cumberland Mining. Back with us now, though, I think, enjoying retirement. Is that correct?
Yes, I am not working anymore.
Not working. It's a good life. Well, Mike, thanks for taking the time. And let me just ask you to tell our listeners what Cumberland Mining is and what mining means in the context of Bitcoin.
Sure. Mining Bitcoins is using computing processing power. So basically just a bunch of computer hardware, very specialized at computing one particular mathematical function. And if you get good enough at it, you're doing two things. One, you're helping process transactions on the Bitcoin network. And two, you're earning money for yourself in the form of Bitcoins. So that's what mining is. Cumberland Mining was a company that I set up. And we were initially miners, but then we turned into Bitcoin traders. And that's the last job I had until June.
All right, so listeners, I just kind of want to open it up to people who, I know we've talked about this in the past, but it is worth revisiting all of the basic details before we dive into what's going on now and what might be coming our way in the future. So it's 844-295-TALK. That's toll free, 844-295-8255, or 263-WXXI if you're in Rochester, 263-9994. And Mike, Forbes profiles you for retiring at the ripe old age of 38 or something. I mean, it's a hard life now. But I also know that people are probably asking you for predictions. Is it the kind of thing where you want to stay away from predictions on what the value of Bitcoin is going to do or what the value of other cryptos are going to do? Because I know that's a question that comes your way often.
Yeah, I mean, I don't mind predicting the very long term. And for me, I think the long term still, I've said it for the past 7 years, is that cryptocurrency, whether it's Bitcoin or another, will replace fiat money as we know it today. So first it'll start with the Venezuelan bolivar. That will go away. And then maybe the euro will start to fall apart. And maybe 100, 200 years from now, the dollar will fall apart. And we will always be able to count on something like Bitcoin, if not Bitcoin itself.
Gary Palmer, you agree with that?
I think that we're already starting to see that. I see that there's all sorts of countries all around the world that are having problems with their primary central reserve currency. And people inside the United States, inside first world countries, we may think that we're immune to these sort of issues that happen to central reserve currencies, but we are not immune. And in our current economic situation inside the United States, where we have trillions of dollars of government bonds with negative yields, quantitative easing policies that are just adding massive amounts of debt, the U.S. inflation rate in November 2017, over 2%, maybe about 2.2%. So that means a $100 bill in your pocket. It still looks like a $100 bill, but it only has $98 of buying power. And so as we're seeing the value of Bitcoin go up, we're wondering, is it really the value of Bitcoin going up, or is it just the effects of inflation in the US dollar that people are recognizing?
George, thoughts on that?
Well, I'd step back on something Gary just said, and I don't think that inflation at 2% is really what's driving your Bitcoin. It's reasonable by historical standards. I think that there are too few people using Bitcoin right now for the inflation angle to be meaningful. But I think that your comment about fiat money or government-backed money, as you want to describe it, is reasonable as long as you have politicians running monetary systems where it's not backed and there is fiscal mismanagement. It's not unreasonable to see individuals seek an alternative currency. And because of that, I think it's reasonable to expect further interest, meaningful interest, in Bitcoin or other cryptocurrencies.
If you want to use it as actual money, Gary, where are you able to do that right now?
So people have several different options depending on their level of knowledge of the industry. So for the mainstream user, especially if you're living in New York State, which is highly regulated with the Bitcoin space, you can go to Coinbase, and our affiliate link is mintingcoins.com/Coinbase, of which you can get an extra $10 free through Coinbase. But if you go through Coinbase, you can connect your bank account, you can purchase Bitcoin, Ethereum, Litecoin, and then you can get what's called a Shift card. And a Shift card is a debit card for your Coinbase account with a Visa logo on it. And you can take that card and use it everywhere that Visa is accepted. At the same time, there are people all around the world who are living on Bitcoin 100% of the times. They are using Bitcoin to purchase airline tickets, hotel rooms, cars, houses, and even food. And these options are increasing at an exponential rate.
Mike, how often are you using Bitcoin to make purchases?
Well, that's kind of changing now, actually. Bitcoin is no longer easy to use as you would use cash. I can give you a short explanation, but let's just say that in the past, year and a half, the actual cost of using Bitcoins has gone up. So if you want to make a donation to WXXI and you want to pay in Bitcoins, and let's say WXXI was accepting Bitcoin, then let's say you want to make a donation of $100 and $100 worth of Bitcoin. 3 years ago, if you made that donation, the radio station would have received about $100, maybe minus a penny worth of Bitcoins. But today, something's happening with the Bitcoin network, and it costs about $15 to $20 if you're looking today on average to send any transaction. So your radio station will only receive $85. And for me, that means Bitcoin is becoming, it's in trouble if things don't change. Okay,
so why is that happening? Why has that change happened, Mike, and what would turn that around?
Okay, so I assume that your listeners know what Bitcoin is. Maybe they don't know the technical details, but there's something inside Bitcoin which sort of is acting as a bottleneck. The network can only handle so many transactions per second. And what happens is, if you want to include your transaction in the history of Bitcoin, what we call the blockchain, then you either have to wait a long time. It could be hours, it could be days, it could be weeks, or you have to pay up for the privilege to send a transaction. Now, it's an arbitrary limit that exists in Bitcoin. And all that needs to happen is this bottleneck it's as simple as changing a 1 in the code of Bitcoin to an 8, and you relieve that pressure. But apparently, a lot of Bitcoiners either don't know about it or they don't support this idea, and they're happy to see the fees go up. So it's a bit of a crossroads for Bitcoin right now.
Okay, and I see the phone ringing. I've got some questions coming in already, but Mike was just touching on some of the basics on how Bitcoin works. I know it can seem pretty dense or hard to wade through, but let me ask all three of our guests, and I'll start with you, Mike. How much more mainstream do you see this now? I mean, from media coverage to the way people talk about it, how much have you seen it change in your 7 years following and investing in Bitcoin, Mike?
The type of user has definitely changed. Today, we're seeing investors, hedge funds, banks getting involved, and we're sort of forgetting about maybe the average person who wants to use it as cash. I used to see people using it for very small purchases, for purchases as small as 4 cents. Tipping somebody on the internet for a clever comment, say, here's a penny, and that was easy to do. Well, now you can't do that. It costs you $15 plus a penny. So the use case has changed, and there's alternatives popping up.
Gary, what about you? What have you seen change since you kind of jumped in with both feet to Bitcoin?
Really what's changing is the dialogue around Bitcoin. Traditionally, Bitcoin inside the traditional world of regulators and finance, Bitcoin has been a dirty word in years past that's been associated with a lot of negative connotations, which has kept mainstream people away from it. And this has kept mainstream people away from Bitcoin and taking advantage of these gains. Since so many people were told to stay away from Bitcoin, so many people were told that Bitcoin was a bubble when it was reaching $1,000, and people are starting to recognize there's more talk about this, there's more evidence about this. People are starting to recognize there's 9 years of proof and trust and validity behind the blockchain system, and more is going to happen in the year 2008 than has happened in the past 9 or 10 years in this world.
Yeah, I mean, look, let's just say hypothetically that one of our guests, maybe the guy on the phone, that I was reading some of his comments about Bitcoin years ago, and I thought, well, $230 a coin seems pretty steep. The bottom could fall out of this. And so I started reading up on what Bitcoin is. And the rather novice writing said, well, Silk Road, it's used by criminal networks. And I thought, I haven't murdered anybody. I don't sell drugs on the internet, so I probably shouldn't be. And then, of course, Bitcoin falls in half. It goes to $115 in about a week. And I thought, I'm going to be wise and I'm going to save my money. Well, there's a reason that I'm still working. George Conboy, when it comes to the regulators, though, Gary invoked the regulators, and some of the writing that we're seeing in various places is people sort of speculating, when is somebody in government going to put a target on cryptocurrencies back and try to regulate this? What do you think?
There's short-term and long-term issues here, Evan. And what I'm seeing in the short term is many people getting involved, not because they understand blockchain technology, not because they think it's a great method of exchange, but many people are being drawn now by the media coverage over the sharp rise. That's likely to create short-term volatility and possible regulatory scrutiny, but it's actually probably a benefit for the longer term, because more people who come in because it's like at a business. You come in because there was a sale, but you become a long-term customer. They may be coming in because the volatility looks good on the upside, but they may stay if they begin to understand Bitcoin. We've already seen financial markets begin to grapple with this, with the now introduction of being able to trade Bitcoin futures on a securities exchange. This is likely to bring more regulatory scrutiny, but more regulatory scrutiny is likely to bring a higher level of legitimacy to the entire cryptocurrency process.
There's an interesting piece written by Kevin Roos for the New York Times, and Kevin has written books and articles on the financial world, and he wrote a piece a couple of days ago titled, "I Was Wrong About Bitcoin, Here's Why." And he lists all of the reasons that back in 2013, he bought a single Bitcoin for $140, and about a week later sold it for a small loss, and then he wrote a piece saying the Bitcoin dream is all but dead. And his mea culpa this week, he says, number one, I assumed that Bitcoin's future depended on its everyday use, and he thought that you would need to be able to see Bitcoin ATMs and Bitcoin used everywhere for it to succeed. He said, I assumed that the blockchain would eclipse Bitcoin itself. I assumed that regulators would crack down faster, and I assumed that Wall Street would stay away from it. And Roos goes on to say he was wrong about all of that stuff. And sure, maybe this is where the bubble is now, but maybe not. And he's gotten to the point where he says, George, I can't tell you anymore what I think is going to happen because I have been wrong at every step.
I would agree about that. This is my third appearance on your show talking about this very topic. My first appearance was, why waste your time with this nonsense Bitcoin? My second appearance was, I'm a believer that it's a legitimate thing and has a future. And today I'm saying you've got better experts about Bitcoin than I am. So I want to look at investor, trader psychology surrounding the current phenomenon. I think it's here to stay. I'm not sure where it's going, but I think there are cases for both upside and downside.
All right, so we're going to get Colin in Rochester on the phone in a second. Alex in Rochester, we're coming to your phone calls. But on that note, George, how often do people who come to Brighton Securities, who, you've been working with clients for years with Brighton Securities, how often are they asking you about this now? And are you giving any advice? If they say, should I be getting into crypto? Should I be putting 5% of my portfolio in crypto, more or less? What are you saying?
We get asked every day is the short answer to the first question. Mm-hmm. Every single day we're getting asked multiple times. The answer depends an awful lot on the person asking and what their goals are. My view is because crypto, particularly Bitcoin, is not a particularly useful means of exchange right now, and it sounds like your two other panelists have widely differing views there. It's not really a means of exchange. It is a trading vehicle. So if you have the mental constitution to trade in what we perceive to be an aggressive trading vehicle, there's no harm in giving it a try. We can't help you with it. Organized securities firms, regulated securities firms don't do business with Bitcoin, but we'll give our clients advice on whether we think it's suitable for what they want to try to accomplish.
And here's my ignorance. Can that and will that change?
Yes. It's in the process of changing now.
Okay.
Bitcoin futures either began trading this week or start next week. So it's beginning to
CBOE
change.
started Monday, and the CME will start this coming Monday.
On that note, let me grab a phone call because there's a question on exactly that subject. This is Colin in Rochester. Go ahead, Colin.
Hi guys. I actually know these guys. And George.
Hello, Colin.
The question was actually for you. Yeah, exactly. I was in the. I wanted to ask about the CBOE's launch of Bitcoin futures Sunday 6 p.m. our time, actually. And how does that impact your regular stock, your regular portfolio? Now that Bitcoin futures is being traded, as well as Fidelity's. I don't know what it's Fidelity Investments GBTC. It's my understanding it's not the same thing as the Bitcoin futures. It's something else. What does this mean for let's say my 401k?
Yeah, I don't have an answer for you yet, Colin. It's because that stuff is too new. What I would say is ask me again in 6 months. We'll have more vehicles at that time. We'll understand better their composition. And in that time, because what I know about you, Colin, is you're not going to wait 6 months to try this if you want to try it. But be careful because we're getting questions about small, over-the-counter little stocks that claim to be Bitcoin trusts and what have you. Some of them may turn out legit and some of them may not. So if it's listed on a stock exchange and claims to be involved in Bitcoin right now, caveat emptor, some of them may turn out to be real. Some of them are going to be scams, just like the penny stocks that claim to be involved with cannabis and marijuana. Most of them are scams.
Okay, Gary, what do you think about futures here?
Yeah, so I get a lot of questions about the futures because this has made a lot of news in the past month or so since it was announced. They said they were going to wait until later in 2018, and they jumped the gun and they launched these futures early. And so I think it's important to recognize that futures play an important role in our society traditionally for things like food or wheat to hedge against risk for the producers of a product. And in the case of Bitcoin, the producers of the product are the miners. And so miners can hedge against risk of the cost of electricity or their operations, and there's a legitimate need for the futures for their market in case there was risk there. But for the average user, the futures is very expensive. It's not something that a normal trader could get involved in, and it's going to be extremely risky because we all have to recognize that the total supply of Bitcoin is never going to be more than 21 million. It's currently about 16.7 million Bitcoins, and less than those are available. And so with the limited supply, the demand could be infinite. And with less than 0.01% of the world involved in Bitcoin and owning any Bitcoin or cryptocurrency technology, there's an extreme upside because when we look at Bitcoin and blockchain technology, we don't see a bell curve, we see an S curve. When a huge mistake that we see a lot of people making all across the world in the mainstream media is comparing Bitcoin to an early internet company like AOL. And Bitcoin is not a company. Bitcoin is a technology. Bitcoin is comparable to the internet itself, the bottom baseline protocol, and not just a company that can succeed or fail.
All right, but before I go to Mike on his thoughts on future, let me just ask Gary briefly. Yes, 21 million is a finite number of total Bitcoins that will be in circulation eventually once miners get to that number. But you can sell fractions of Bitcoin. So
up to 8 decimal points. Yep.
Okay, so it's not a case where there's only going to be 21 million units. That Bitcoin, a single Bitcoin, could end up worth $250,000, U.S. dollars. But you can chop it up in a lot of different ways, right?
You bring up a great point. And people have a tendency as human beings to like whole numbers and to appreciate whole numbers. And so there's a psychological barrier that people see with Bitcoin as it increases in price from $16,000, $17,000, $50,000 that they're never going to be able to obtain a whole Bitcoin. But because a millibit is 0.001, a milli, 1,000. So a millibit. Right now, a millibit is $16. And when one Bitcoin reaches $20,000, a millibit will be worth $20. And so $100 would be 5 millibits. And I think it's important that at this stage, as Bitcoin is going hyperbolic, that we start recognizing and pricing things in millibits, not pricing things in Bitcoins to help the user psychology moving forward.
All right, let me turn back to Mike Komaransky. Thoughts on futures and how it's impacting what's going on now, Mike?
Yeah, sure. Well, I can't hear your users' phone calls for some reason, but
okay.
I will talk about futures. I was a futures trader for 16 years and sort of overlapped my my time as a Bitcoin trader as well. For the two futures exchanges that are listing Bitcoin futures, one is the Chicago Board of Options Exchange, and the other one is the Chicago Mercantile Exchange next week. Both have decided on a cash-settled future, which means you're betting on a future price of the Bitcoin, and the final payment is in dollars. That's exciting that they're getting involved, and it adds some legitimacy to Bitcoin itself. But for me, the very exciting future, when it comes, it doesn't exist yet, will be a physically settled future, which means you can put money in today, or you can agree to put money in at a future date and actually receive Bitcoin. So 6 months from now, if you think the price is going to be much higher, you can enter into a futures contract, and instead of receiving dollars at the end of the future, you can receive actual Bitcoin. Well, I think it's exciting. I think the CME can handle it. If you look at what the CME can actually coordinate in terms of delivery, they're coordinating the delivery of lean hogs, of cattle, of corn. If you can coordinate the delivery of live cattle, then they can certainly coordinate the delivery of something as easy to send as an email, such as Bitcoin.
Mike,
that'll be an exciting time.
George raised the idea that even if we do see regulation happen, that might kind of create an air of legitimacy to crypto that some might view it lacking currently. How do you view the future of regulation? And for those who are very new to Bitcoin and cryptocurrency, saying, well, whatever I decide to put in, are regulators going to come and try to kill this thing? You've been around it for a long time. What are your thoughts on that?
The easiest choke point for regulators to get in between you and your Bitcoin is the point where you're exchanging dollars for Bitcoin. Because the regulators, they know the banks where you're sending the money from. They know the exchanges where you're buying the Bitcoins from. And they'll probably go after that the most if they find that there's a problem. I guess once you have your Bitcoins, you're kind of past the regulators at that point.
Okay. It doesn't sound like you're concerned.
I'm not concerned because you can't regulate Bitcoin itself. You can't. A regulator can't look at the Bitcoin protocol, the Bitcoin network, and say, you know what, I don't like the rules of Bitcoin, I'm going to change them. That, for me, is like true regulation, and no one can do that without the consensus of the Bitcoin network.
All right, we've got some really interesting questions coming in from listeners. I'm late for our only break of the hour. We'll take that now, and we'll come back, and we'll get your questions on Bitcoin and cryptocurrency. Last check, I don't know if you got it in front of you, Mike, George, Gary, I don't know where. Bitcoin, last I checked, was just under 17K when the hour began. It has been more volatile than most of the equities in the world, but it seems stabilizing.
More volatile than anything would be a shorthand.
Yes, it's more volatile than just about anything, fair. But 16, 17K, it's stabilized around that range this week. And is that, Gary, you looking now? Is that where? So,
yep, that's what I'm saying. I mean, stabilize is a loose term here.
Stabilize is a very loose term, but it has been on fire, and we are trying to at least address the questions that our listeners have. So some very good ones that we'll get to. Alex, Jake, we've got good questions from you. We've got some phone lines open. If you want to call 844-295-TALK, it's toll free, 844-295-8255, or 263-WXXI if you're in Rochester, 263-9994. My guests include Gary Palmer, who is the founder of Minting Coins and Bitcoin NYS. Mike Komaransky on the line. He's a Bitcoin investor and the former head of Cumberland Mining. George Conboy, the chairman of Brighton Securities. And back to your questions after this break. Coming up in our second hour, China has just powered up a new satellite dish, the largest the world has ever seen, in a remote Chinese mountain range. And it is specially designed to try to make contact with alien civilizations. But some are warning this is a bad idea. Anyone strong enough to find us would probably wipe us out. So we'll talk about the etiquette of making first contact next hour. Welcome back to Connections. I'm Evan Dawson. Dan in Hilton next on the phone. Go ahead, Dan.
Hi, good morning, or good afternoon.
Good afternoon.
I've heard that processing Bitcoin transactions consumes a lot of power. Can you address that?
Yeah, Dan, thank you. I'm going to kick that to Gary, if you don't mind, Gary. The question again is, he's heard that Bitcoin creation of Bitcoins, mining, he's read consumes a lot of power, and it's a concern for him. Gary, can you hit that?
Yeah, absolutely. So everything consumes power, and we have to think about the existing systems that we have with inside fiat U.S. dollars, with inside gold, and recognize that printing money uses electricity, running all of the banks and all the middlemen in the world who need to help process and reconcile payments in the payments world between merchant services consume, having the lights on and the people and the energy. There's huge amounts of energy with the existing system, with other systems. And when people are pointing to the energy consumption of Bitcoin and using that as a talking point, then users out there, I want you to recognize that there's fear, there's uncertainty, and there's doubt. And the fear, the uncertainty, and the doubt is used to divide us and distract us from what's happening. And so when you're hearing about information, you just want to recognize the confusion and the fear that historically has been out there around Bitcoin, and do the research to make your own decisions, right?
Okay. George, you've been reading about this. Does it worry you?
Doesn't bother me at all. I'm just an observer. If it takes a lot of energy to create the thing, maybe it's a good thing, maybe it's not. It takes a lot more energy to create a Model T than it did to build that wooden wagon and feed the horse. Ultimately, society was better off.
Mike Komaransky?
I feel the same. I think you're building a currency that liberates the world from other monetary regimes, and you'd pay a very high price for that.
All right, Alex in Rochester, I'm going to come to you in a second, but I want to follow up with a separate mining question that comes from Jake. He writes the following, quote, "The real big question mark I have concerns Bitcoin mining. Mining is the process of computational proof of work that the entire system is based on. Eventually, the last Bitcoin will be mined, and there will be zero incentive for miners, and this is built into the Bitcoin protocol. It's unavoidable. How can this not guarantee a collapse, seeing as how if the miner pool shrinks enough, it will become vulnerable to large-scale attacks? Every solution I've seen to this problem involves adding a trust system to the protocol that destroys its decentralization concept and would allow the same middleman fees we have in a conventional banking system. Splitting Bitcoins won't fix the problem with the fact that miners will bail when the last Bitcoin is mined. That can't be good for the stability or security of the network."
That's a provocative question.
Yeah, Mike, what do you think?
I'm sorry, is she suggesting that the last, once all Bitcoins are mined, that there be no incentive to mine anymore and the mining pool will shrink?
That's from Jake, and I think what Jake is saying...
Oh, sorry, Jake.
Yeah, I think what Jake is saying is that once Bitcoin reaches its 21 million mark, and right now it's in the 16 to 16.5 million?
Yeah.
Okay, so once it reaches 21 million, whenever that is, that everyone involved in that process of creation of Bitcoins will essentially abandon the system, and I don't know if it's going to be moving to mining Litecoin or something else.
This could be a misconception on Jake's part, or maybe I'm misunderstanding the question, but there's two ways that miners earn money. One is from a scheduled payment to miners for doing their work, and the other is the miners get to collect fees from people who transact Bitcoins. So earlier when I was saying it costs $15 to $20 to send a Bitcoin today, that $15 to $20 gets paid to the miners. So once all 21 million coins are produced, the miners will be collecting fees from transactions. So I don't expect miners to leave en masse.
Okay, so there's not going to be an abandoning of the system and an imminent collapse then. Jake, thanks.
No, that was one of the beautiful foresights from Satoshi Nakamoto, the creator of Bitcoin.
Okay, and thank you, Jake, for that. And if we covered it, great. If not, send a follow-up there, because I think we're doing our best to make sure we're hitting the points that you're trying to raise. Let me get Alex in Rochester on the phone next. Go ahead, Alex.
Hey, I have a question about third-party apps, specifically Coinbase. So I bought Bitcoin on Saturday, and it still hasn't gone through. It's been saying pending the past, what are we on, Wednesday? 4 days.
Yep.
Why did it take so long, just out of curiosity?
Alex, thanks for the phone call. So Alex is raising the point that a lot of people have had, which is that there's this flood of people who are getting into crypto in the last couple of weeks, especially, but they're wondering why on a Saturday, if I put in a purchase at Coinbase, am I not seeing it show up 4 or 5 days later? Well, if you're a Coinbase customer, they sent out notes last week saying, please give us time here. I think some people are trying to call Coinbase the second they see it hit a certain number in their mind, but it's 15,000 I want to sell. Coinbase is saying we are loaded here, and I saw that notice last week, so that might be one of the answers, Alex. Gary, are you hearing anything about why it's taking transactions longer right now? Is it just the surge in interest?
There could be a couple details going on here. And so when people are purchasing Bitcoin through Coinbase, they're connecting their bank account. They're using their bank account, typically maybe their credit card to transfer to purchase the digital asset. And when people are using their bank accounts because of the way the payment systems take and to reconcile these payments in the traditional financial world, it typically takes 7 days, if we're lucky, for some of these transfers, some of these bank-to-bank transfers to go through. And so when people are purchasing on Coinbase with their bank accounts, you're purchasing at the market rate that you're seeing, but the full transaction takes 7 days to go through because of your bank and the traditional banking world.
Alex, thanks for the question. And that brings me back to the point that Mike was making earlier this hour, which is that right now, Bitcoin transactions are a little cumbersome. They're a little more expensive. Right now, Bitcoin's capacity to make transactions on a per-minute basis is not nearly what a Visa or a MasterCard is. And that's one of the reasons, and I think Mike was hinting at this, that you see forks. Now, I don't want to get too down in the weeds, but it's important to mention that if you're looking at actually buying cryptocurrency, you'll see Bitcoin, and then you'll see Bitcoin Cash, and then you'll see Bitcoin Gold, and you might even eventually see Bitcoin Diamond or Bitcoin Forever or Doppler Bitcoin. I don't know what's going to come eventually. But there are forks. And Mike Komaransky, I have seen you write in various places, and I don't know if you still agree with this, that Bitcoin Cash might have a higher ceiling or a better future than Bitcoin itself, and it's not exactly the same thing, and it is confusing. So I'm curious to know if you still feel that way, and if you can explain for listeners like Alex or others who might be wondering about, the speed, what is available, what these things are, if you can kind of give us a quick explainer.
Yeah, first of all, there's, thousands and thousands of cryptocurrencies out there. I'm not saying that there's thousands of forks. That forks are a slightly different nature, but there are thousands to choose from. My personal view is that 1 to 5 of them will succeed as world-class currencies. Now, regarding the forks, if you understand how the blockchain works, or if you don't, it sort of works like this. It's you have a book, and on each book there's a page. That page gets turned every 10 minutes. That page contains transactions from the most recent transactions of Bitcoin. So on page 284, maybe it says that Evan has received 50 Bitcoins. Okay, that page is there for the rest of history, and the pages keep turning. Now, the problem with this book is that it can only contain so many lines of transactions. That's actually a physical constraint within Bitcoin. Let's say this book can contain 1,000 lines worth of transactions. Once you reach that 1,000 lines and you've reached the end of the page, you can't fit anymore, which means you have to wait for the next page to be turned. And if the next page is full, then you have to wait again another 10 minutes. And the only way to get around that is to pay higher and higher fees. Now, I think that's not a very good system for the future. right now Bitcoin can handle 4 transactions per second. Visa can handle 20,000 transactions per second. Who's going to win? I know comparing Visa to Bitcoin isn't that fair, but then Bitcoin Cash came along this summer and says, okay, for the first, let's say, 400,000 pages of this book, we'll keep all of the transactions, all the lines on the pages are the exact same. But on page 400,001, we're going to make the page size 8 times bigger. We can fit 8 times as many transactions, and therefore you will have a better chance of getting your transaction into the Bitcoin ledger. And what that did immediately was it relieved the pressure and reduced the fees. And suddenly people can start trading Bitcoins again. They can send 5 cents worth of Bitcoins and pay practically nothing for it. And that's where I think Bitcoin Cash is truer to the original vision of what Satoshi Nakamoto had in 2009 when he wrote Bitcoin, a peer-to-peer cash protocol.
All right, so listeners, if you're looking at unit to unit, Bitcoin's around $17,000 per coin right now. Bitcoin Cash about 1/10 of that. And Bitcoin Cash, Mike, if all of what you're saying is true, it will have a better future because it just sounds like it's going to be more efficient and just a better version of Bitcoin. So do you still feel that it's got a better future than Bitcoin?
Well, yeah, I think what's happening, people are sort of morphing what Bitcoin is to them. They're saying, well, Bitcoin, the one that's worth 17,000, they're saying it's not cash so much as it is a store of value. Well, that's great and everything, but Bitcoin Cash can be both a store of value and used as cash. And I think what point is the money if you can't spend it? And that's why Bitcoin Cash will eventually beat out Bitcoin. And if not Bitcoin Cash, then something else. I think Bitcoin really needs to evolve beyond its small limitations right now.
Okay, Gary, thoughts on Bitcoin and its forks like Bitcoin Cash, which, by the way, should not have been called Bitcoin Cash. People who are not smart, like me, think that it means Bitcoin, actual, physical currency. Like I go to a store and I see something that's on sale for $99.99, and I go tell people, oh, that's less than $100. That's what I do because I'm not very smart. So I just wish they would have called it Bitcoin 2.0. But regardless, it's called Bitcoin.
If you wait
Cash.
long enough, If you wait long enough, Bitcoin Cash will just be called Bitcoin again.
Okay. Well, Gary, do you agree?
It's very insightful what you just said, how the Bitcoin Cash name is adding layers of confusion onto people who aren't familiar in this space. And some people have called the actions of, what the teams behind Bitcoin Cash, they've called that borderline fraud in terms of misinterpreting sometimes Bitcoin Cash as Bitcoin, confusing people, in some cases causing people to lose significant amounts of money, especially as they see the valuations of Bitcoin BTC increase substantially over Bitcoin Cash. I think Mike's analogy of the Bitcoin blockchain in terms of the book is a great analogy, and I think Bitcoin Cash is interesting because what it is it's a difference of opinion. It's a shift between two different camps that want to have a direct decision in the future of blockchain technology. And so while one group with the Bitcoin Cash decided to make the pages bigger, the Bitcoin BTC is adding additional books. And these additional books that they're going to be added to BTC, they're called, I don't want to get too into weeds, it's called Lightning Network. And these Lightning Network subchains are going to be cryptographically tied to the main Bitcoin chain. And so there's just two different philosophies in the way that Bitcoin should proceed. And it's important to recognize that the vast majority of the world is behind Bitcoin BTC. The infrastructure is behind Bitcoin BTC. The network effect is behind Bitcoin BTC. And when I was mentioning earlier the fear, the uncertainty, the doubt, those are the exact tactics that we're seeing coming out of Bitcoin Cash. And so for me, that's a red flag. Now, with that being said, Bitcoin Cash, in my perspective, is a great hedge for if anything was to go wrong with Bitcoin. There's no denying that. I just don't think anything is going to go wrong with Bitcoin, and I think Bitcoin will continue to be the dominant blockchain for a long time to come. Everything is traded against that.
I can't wait 10 years from now. Gary and Mike are going to be on the show, and one of you will be right and one of you will be wrong, at least in the 10-year period, and it's just going to be a brawl. I like that.
Evan, do this, and then in the in the next week,
Yeah.
put up a Bitcoin donation and a Bitcoin Cash donation site. We'll see which one's more active.
You're saying Bitcoin Cash because it's easier, less cumbersome, faster, and smaller fees.
Yeah, you'll get the $5 donations. You'll get plenty of them. Bitcoin, you can't have a $5 donation without spending $15 to send it in the first place. Just do that. Just
okay.
Put up a QR code on WXXI, and we'll see your listeners send money.
Okay, Gary?
Yeah, what Mike is saying under the current situation is 100% correct, especially because a lot of the transactions, the pages are being filled with empty transactions, and there's conjecture that might be coming from the Bitcoin Cash side of the camps. But I just want people to go back to the original analogy. When people compare Bitcoin to AOL or Netscape, that is not a proper analogy. Bitcoin is not a company. Bitcoin is a technology. Just like TCP/IP built the internet, just like SMTP built email. When I was surfing the internet, doing my high school projects, and I was waiting for the internet to load, I don't know who remembers this, but some images would load line by line. It was really slow for the internet to work. And I was involved in building websites and doing SEO before Google was actually a company. And the internet was really slow. People didn't believe that people were going to put their credit cards into this, computer box, let alone they were going to receive shoes and how were they going to handle the shipping. It was a crazy world back in the 90s and even the early 2000s. Yet here we are, decades later, and we have people with supercomputer smartphones in the pockets of practically every single person in the world, including several people in extreme poverty, third world countries, who are able to live stream live video from opposite sides of the earth, which was not possible back in the 90s when images were loading line by line. And so if we're looking at the speed and the transactions of Ethereum or Bitcoin with today's technology, with the massive increase in adoption that we've been seeing, of course it's not going to keep up. And this is one of the critical areas of the world that developers are focused on, is the scalability.
All right, so I'm going to get to Robert in Fairport in just a second. Hang there. But real quick here, you just raised Ethereum. The unit's known as an Ether. It's a different kind of cryptocurrency. And I know, listeners, I've gotten some emails from people saying we're down in the weeds a little. And that's true, but we're trying to keep it accessible for you. And when it comes to cryptocurrency, Bitcoin is the best known. It's the highest value for a single unit right now. But there are others. And we've seen explosions in the value of Litecoin and Ethereum especially this year and in the last few months. I'll ask Mike one quick question on this. Do you think, Mike, the explosion in value in Litecoin and Ethereum in recent weeks is due to the fact that Bitcoin crosses 10,000, it gets all this media attention, it shows up in all of these mainstream outlets, people get interested, they go to buy one and they say, oh, it's $12,000, I can't afford that, but here's this other thing that's $150 or $225, and I can do that, and there's been sort of a run to the other ones. Is that happening?
Well, you can always buy a fraction of a Bitcoin. You should repeat that many times. You can always buy a fraction of a Bitcoin.
I know, but I'm asking if you think that's kind of what's happening.
The main reason, the only reason that Litecoin is even alive right now is because the people, the core developers who are pretty much governing the Bitcoin's direction right now, they refuse to scale on chain, which means they refuse to enlarge the size of the book's pages. And because of that, the market capitalization of Bitcoin went from basically 99% 2-3 years ago to where it is now. Bitcoin only commands about 58% of the crypto network. I think that's a large part due to Bitcoin's inability to scale. It's like their Kodak moment.
I got to get back to the phones, Mike, but I'm going to ask Mike and Gary, and George will say leave them out of this, but I'll ask Mike and Gary, if there are 3 to 5 forms of cryptocurrency that you think will survive long term, Mike, and you had to bet today, those would be which ones?
Bitcoin, whether it's Bitcoin or Bitcoin Cash. Ethereum is very interesting because it's not just money, but it's sort of programmable smart contract type money. It's very, very interesting. And then Zcash and Monero, I won't pick a winner between those two, but if you think Bitcoin's anonymous, wait till you see those two coins, Zcash and Monero.
Okay. Gary?
It's an interesting question. I think it's important to recognize that out of the top 100 coins that are listed on CoinMarketCap.com, I think about 43 of those are based on the Ethereum blockchain. There's a lot of development on the Ethereum blockchain. Of course, I think Bitcoin BTC is going to be number one. I think Ethereum is going to be number two. And then there's lots of different projects beyond that. There's a lot of reasons to look at Ethereum Classic. There's a lot of reasons to look at OmiseGo, OMG, Monero, as Mike was saying, Litecoin, Dash. Steemit.com is a social media network on the blockchain.
These are all starting to sound like bad band names.
Sounds like a great name.
It's better and worse.
It does. Dash. Okay. Robert in Fairport. Next up. Go ahead, Robert.
Thanks for taking my call. People are kind of attracted to this because it's going up in a hurry, and it sounds like it's a great way to make a quick buck. But, history has shown that these things haven't worked out well back from, if you go back to Tulip Mania in the 1600s, there's a book out there called Popular Delusions and the Madness of Crowds, and there's some rumors they're going to add an appendix for Bitcoin. But the problem with Bitcoin is that it feels a lot like a multi-level marketing kind of scheme. I remember back in the 1980s, we had something like that go through the Rochester area called the airplane game. People would recruit people to be on a plane, and then the more people you recruited on the plane, you'd eventually have the first people recruiting those people would be the pilot and the co-pilot. At that time, they would parachute off the plane with all the money that the other people had paid in. It was basically a pyramid scheme. And this just, in some respects, sounds just way too similar to that.
Okay. Thank you, Robert. I'll ask George Conboy, what do you think?
I'll take issue with that. I have two comments and a question. So my two comments are that Bitcoin, Ethereum, all the rest of them, they're a system devised by humans, like every other system devised by humans. It doesn't mean it's bad. It will go through its ups and downs, and there will be considerable development needed to get it to a point where the optimists project it will be. But I think there's a reasonable case to be made that it will get there. But it's still a system devised by humans. Second, knowledge is power. So if you're thinking about buying, whether it's Bitcoin or Bitcoin Cash or Ethereum or Litecoin, learn about it. Listen to shows like this. Do some reading and be careful. The phrase caveat emptor comes in. Caveat emptor doesn't mean you shouldn't do it. Caveat emptor means know what you're doing before you do it. I'll take issue with the previous caller's analogy of that Ponzi scheme in Rochester back in the 80s. That was a nonsense thing that no one should have gotten involved with.
Apples to oranges there.
Yeah. My question, though, so I had two comments. The question is, and this is for our experts here, so when mining is done, this goes back to the question we had a little while ago. When mining is done and there is payment for processing, so it should still be viable because the miners can become just full-time processors, does the system allow for the addition of more processors? Can there be competition in processing that may drive the fees down? I don't know if that's true or not, but that would be a plus.
All right, Mike, what do you think?
Yeah, there's new miners all the time. The pressure for fees will be going down forever.
But I'm talking about when mining is finished and there's no more profit to be had from mining.
Which is in like over 140 years away.
You think is that far? Okay, fine.
Yeah.
Then that's a moot question.
All right, so let's close with a couple quick ones here. Tom writes to us and says, when I can pledge to WXXI in Bitcoin, my world will make more sense. Well, that's what we're going towards here, Tom. We'll see. Or maybe Bitcoin Cash. But you should all be pledging to WXXI. You all know that. We take fiat currency. We love it. And Dave writes to the program and says he was just tuning in at the halfway mark, and he did wonder if panelists see the future of Bitcoin as an everyday currency or more of an investment like gold. Not the current, but the future. You got to do it in 20 seconds. Mike Komaransky, the future of Bitcoin is more everyday currency or investment?
Everyday currency. Therefore, an investment as well.
Okay. Gary.
Everyday currency. If you're using fiat in 5 years, if you're using cash at 5 years, people are going to laugh.
In 5 years?
Less than 5 years.
Come on.
Nice.
No.
Come on.
I'm not the only person to say this. This is also stated by other, people in the area, including Tim Draper. It's going to happen at an exponential pace. Governments are going to be issuing their own cryptocurrencies. We're already seeing Russia issue their bit ruble, and it's only a matter of time. The dollar can't compete because cryptocurrency is too fast.
So you are hodling. You are holding on for dear life to your Bitcoins.
It's Andreas Antonopoulos has questioned: are people really investing, or are they coming for the investment and they're staying for the revolution? Are they investing now, or are they really exiting?
I'm glad you were here, Gary. This is great fun here. And George Conboy, real quick here: future currency or investment?
Near-term investment. Longer term, I think it will evolve into a currency and means of exchange. What's near and long? A few years worth of investment, and it becomes currency after that. I'm not quite on Gary's accelerated pace.
Well, we'll see. This will be fun, though. And Gary, thank you for being here. Gary Palmer, and online where to find you?
At Minting Coins, and if you want to come to our meetups in the greater Rochester area, you can find us at BitcoinNYS.com.
BitcoinNYS.com. Thanks for being here. We know where to find you, Brighton Securities, as always.
BrightonSecurities.com.
The chairman. Thank you, Chairman. Good to have you. And Mike Komaransky, enjoy retirement, a Bitcoin investor, former head of Cumberland Mining. I won't ask where to find you because you're just a private citizen. But thank you. Thank you, Mike.
Thanks for having me.
You got it. With a short break, much more connections coming up.